Ashwini Agarwal, founder of Demeter Advisors, who joins in right now. And for the longest time, Ashwini was telling us and our viewers that for conservative old hands like him in the markets, the froth in the market was too good to be true. Some of that froth has cooled off. Ashwini, has it cooled off enough or has it not? Because and then of course, Ashwini, there are budgets and there are global events and technical factors to help that, but just trying to understand, this would have been on expected lines for you, but has it done enough, or do you believe there is still some time to go?
Very interesting question, Neeraj. Thank you for having me on your show. One was bracing for this for the last 3 or 4 months, because it was too good to be true, as I have been saying. And to some degree, in individual stocks, now I find that price is attractive enough to participate to some degree. But in many areas, I think valuations are still quite stretched. And what I'm really struggling with is this, that, when you look at the aggregate valuations of smaller companies, whether it is, stocks in the BSE 250 to 500, or it is in the small cap indices, aggregate valuations are still quite rich. And that's made up of extremes, right? So you have, let's say, the banking stocks, which are going a begging at between 6 times to 10 times earnings. And you have, some stocks which are so-called in the nuclear space, where, the recent budget spoke about having smaller size nuclear plants. But when you look at the valuations, they're north of 100 times and everything's in between. So, to cut a long story short, aggregate valuations are still expensive. Opportunities, individual stocks are emerging. But the only thing I'll caution you is that, if there is a broader sell-off which goes unchecked for another 3 or 4 months, everything will hurt. So buying a cheap banking stocks that done nothing for the last 3 years might help you lose less, but you still may lose money. So it's an interesting situation.
Yeah, it is. Okay, what's the probability of that happening, Ashwini? Because I've heard both sides, right, post-budget, and the budget to a lot of minds was a non-event, as it should have been. Let's put it that way. Now, my question to you is, what's the probability of the mid-caps and small caps hurting more? Because the last 4 years, all major India dips have been bought into. There's a Citi note which I read this morning, or it came in yesterday maybe, but which said that FIIs have the highest underweight in India in the last 15 years. At some point of time it will go, because India is still a 6% growth economy, much unlike a lot of others, right? So do you believe the probability is skewed towards mid caps and small caps correcting further for the next 3-4 months, or is it skewed towards a recovery sometime?
Okay. Let's break this discussion into two participants. One is the foreign institutional investor as a participant, and the other is a domestic saver as a participant. Right. Whether he comes directly or he comes via mutual funds is not relevant to this discussion. Okay. From a foreign investor's perspective, India is still relatively expensive compared to other emerging markets, and that continues to be kind of a thorn in the side. More importantly, I think in the middle of 2024, the foreign investors also realized that the rupee was expensive as a currency, and that led to them staying away or exiting partly, as they did. I think the first signs of foreign investors getting interested in the market would be the correct valuation for the rupee, or if there is a collective feeling that the rupee has bottomed out. To this end, I think the recent stance of the RBI to allow the rupee to find its own level in an orderly manner is the right thing to do.